Right now, what's making Europe so attractive, at least to investors? I know when it comes to the UK, dividends are expected to increase 4% year over year in 2024. Dividends a much bigger part of the investing picture in Europe. But what other factors are driving this outperformance?
Well, it's a combination of higher dividend yields, more attractive valuations, but also more exposure to cyclicals. If you assume that there's going to be a global recovery, then cyclicals are likely to perform better in that kind of environment. So I think that's part of the calculus as well. In addition, as you mentioned, earnings have come in, and it's been a pretty good earnings season for the STOXX 600. About 61% of companies have beat earnings. That's higher than the average that we've seen over the last few years. So all those things together play an important role. The key short-term catalyst is that the ECB cutting rates seems like a much surer thing than the Fed cutting rates in June.
So, Maximilian, coming over to you, as we just mentioned, the stocks at a fresh record, the FTSE also moving at a record. What do you see as some of the catalysts for these European equities? Generally, European equities have kind of lagged U.S. equities, but this year they're having a very strong run.
Yeah, good morning. Well, I think some catalysts are already in place, right? I think they'll continue to work. One is that you have a relative acceleration in European growth, while you have a relative deceleration in U.S. growth. So that's speaking in favor of Europe. Also, you've just discussed EPS growth, right? This was the first quarter in 6 quarters where we have sequential growth in earnings. So Q1 earnings are up 9% versus Q4 earnings last year. So we have this nice turning point, and we think earnings will continue to come in better than people expect. Just, consensus expects minus 2% earnings growth for Europe, which I think is very unlikely looking at fundamentals.
So, Maximilian, I'm going to stay with you just for a second. How does the rate cut picture come into play here? The ECB widely expected to cut rates in June. When it comes to the Fed, it's just no clarity at all.
Also here, right, it's more favorable in Europe than in the US. You've seen European inflation coming down. European inflation is now at 2.4, which is, in the range of historically normal inflation. So why not cut rates? We think we'll see a first cut in June. That will again drive attention, I guess, to Europe being in this favorable situation of economic growth picking up and inflation coming down at the same time, which is a very nice backdrop. That should be helpful for markets looking forward as well.
Kristina, coming back over to you, we've all seen something in Europe that's not unprecedented, but a bit unusual. A number of very large share buybacks, just thinking about BP's, one of them, $1.75 billion. Do you believe that's a long-term tailwind that can continue to carry European equities? Do you think buybacks will become a bigger part of the corporate culture here?
Oh, absolutely. The momentum in buybacks has been really significant among European stocks. And I think that could continue because there is cash on balance sheets that can be deployed that way. If we were to look at the top 20% of companies in the STOXX 600, those outperformed the overall stocks over the last 10 years. That's the top 20% of companies in terms of buybacks. So the more buybacks we have, I think that's a very significant support for European stocks going forward.
What about the economic picture here in Europe? So it's been kind of mixed. I've been here in Europe for a couple of weeks covering some of the PMI reports, Kristina. I'm going to stay with you for a second. We've seen certainly a lot of mixed PMI reports and some softness in Germany and France, which are the bigger economies here in the Eurozone. In the U.S., we're seeing, for the most part, except for recently, stronger than expected economic reports. Here in Europe, it's been kind of mixed and soft. How does that play a part in your view when it comes to European equities?
Well, interestingly, we're starting to see something of a handoff where we are seeing a bit of a deceleration in the U.S. relative to Europe. Europe has gained a little momentum in terms of economic growth. In fact, most recently, what we've seen is signs that Germany and France, the 2 largest economies in Europe, are doing better. They had been laggards in terms of economic growth for some time. So the picture is certainly improving at the same time that inflation is getting, or disinflation is progressing, I should say. And so it's a very attractive picture in relative terms, for sure.
Maximilian, I'm going to give you a last word when it comes to this. How are you viewing European equities longer term? Again, I know Kristina feels like it's improving, but we still really seeing like a lot of soft manufacturing numbers and even composite numbers when it comes to Italy and France. In your mind, what's the trajectory of the economic situation here in the Eurozone, especially those big economies, and how does that inform your view of the equity market?
Yeah, so I have a more positive. Yeah, so I have a bit more of a more positive view on the data. And if you look at economic surprises, they've actually turned from pretty negative 6 months ago to quite positive just now. And if you look at the composite PMI, for example, that's also been positive. There's some regional sentiment indicators like the IFO for Germany, which is back up. So quite some indications that we have been seeing the trough already in Q1 growth. And our economists have just moved up their growth forecast, for example, for Germany from negative to positive. So we are at this nice turning point. And I think that is one reason to believe that we will have earnings growth over the coming month. Just remember that we've had 4 quarters of double-digit negative earnings growth already. That means the base effect that we have going forward, starting in Q2, are very favorable on top. So if you have a bit of a recovery and this very nice base effect, I think it's likely that we'll have pretty positive growth in earnings, which should be a surprise to market, different to the US, right? We already have positive earnings expectations for the US. We think they're about right. So fewer beats in the US, more beats in Europe.